Trades, I wanted to do a video analysis update of the stock market real quick because we're really going to talk about Zoom, Salesforce, Zscaler, DataDog, Okta, and Cloudflare to cover the new rotation into the stay-at-home and the software stocks. We're also going to talk about AT&T and Verizon to show setups in the 5G sector. Then we're going to talk about Neo, Workhorse, and Blink Charging, as well as Acromoto, to show how the electric vehicles, will also be beneficiaries in the next rotation in this market. We'll also talk about Nano Dimension, Rocket Mortgage, and Beyond Meat to talk about some of these high growth setups. Okay, so let's get into the Nasdaq right now, just really quickly. I've talked about this a lot in my previous videos, but the Nasdaq QQQ with SPY puts in a very important low on September 21st. From there, it has a wave 1 and a wave 2 correction. Then it goes on a wave 3 rally and puts in an ABC wave 4 correction, where the low of wave 4 perfectly retests the high of wave 1. So this is a very textbook wave 4 correction, and we have begun wave 5 from this March low. So this is wave 1 of wave 5, and ABC correction puts in wave 2 of wave 5. From there, QQQ goes to 340, which is the 161.8% extension of wave 1. So QQQ has confirmed that's a wave 3, and right now, as long as it's above 324, which is the high of wave 1, as well as the 50% retracement of wave 3, then we are expecting QQQ to go on a rally higher for the fifth wave to complete somewhere between 354 and 360. 354 will be the length of wave 1, placed at the 38.2% retracement of wave 3. If wave 4 is shallow and ends right here, then the wave 5 could go as high as 360. But right now, in the next 3, 4, 5 weeks, I expect QQQ will hold above 324. It will go on a rally to between 354 and 360. Once it gets there, it will be looking to correct this cycle with an ABC correction. Okay, that would not be the top in the market on any type of long-term time frame. This is we're swing trading. These are shorter time frames. This is not a long-term high that we're going to make in the stock market by any means. Okay, the bears are right that it's the dot-com bubble, but they're wrong about the year. Okay, it's not 2001, it's 1996. Okay, this is wave 1, ABC correction, wave 2, wave 3, wave 4. We're looking for a wave 5 rally to 354 to 360, then we'll correct the cycle. Where will that correction end? To be honest, very tough to tell where a corrective wave is going to end before it happens. We're going to need to see where wave 5 tops. If wave 5 tops between 354 and 360, then we'd be looking for the ABC correction to end for QQQ between 300 and 310 before we explode higher this summer. Okay, and we will explode higher this summer. But what I think is going to happen is that this correction we're expecting is going to be a massive rotation into the software and stay-at-home stocks, the 5G stocks, and the electric vehicles, as well as some of these high-growth names like Nano Dimension, Rocket Mortgage, and Beyond Meat. Okay? So that's not just my opinion either. Okay, every single stock that we're going to go over in this video, besides Facebook, Nvidia, and QQQ, has reached the very bottom of its 1-year implied volatility range in the options market. I'll show you where I'm getting those numbers, but the options market at the very end of the quarter had those stocks having extremely cheap options as a group. Okay, I believe the options market knows there's a huge move coming. The wave theory and the sector analysis is really telling me that's going to be to the upside. So when there is a sell-off in the market between mid-May and late June, it's going to be a massive rotation into stay-at-home, electric vehicles, some 5G stocks, and some of those consumer defensive big box retailers like Walmart and Procter & Gamble we talked about in my last video. Okay, but before we continue, this same count for QQQ can be replicated on Facebook exactly. Okay, so this is the wave 1, and ABC correction puts in a wave 2 low for Facebook. Now we take our Andrews pitchfork, we connect the beginning of wave 1 with the high of wave 1 and the low of wave 2. Facebook goes to the 161.8% extension of wave 1, puts in a wave 3 high. Now it's bouncing out of this wave 4 retracement box. Wave 4 in Elliott wave theory ends between the 38.2 to 23.6% retracement of wave 3. It does not go below the 50% retracement of wave 3, and it does not go below the high of wave 1 unless it's a leading diagonal. We'll talk about that situation with Verizon. But the bottom line, if Facebook is above 284 to 286, it's expected to take a fifth wave higher to 337, which will be the length of wave 1, placed at the wave 4 low in the coming weeks, then Facebook will be looking to correct that cycle. Okay, it's the exact same count for QQQ, it's the exact same count for NVIDIA. So NVIDIA is the same thing. It completes an ABC correction in March, and then from that ABC correction forms a very clear wave 1, an ABC correction, puts in a wave 2 low, and then NVIDIA goes on a wave 3, and now it is in this wave 4 retracement box between 588 and 611. So NVIDIA should not go below 569 because that's the 50% retracement of wave 3. As long as that doesn't happen, NVIDIA is going to go at minimum the length of wave 1, places the wave 4 low, taking NVIDIA to 670. Then it, too, with QQQ, with Facebook, would be looking to correct that cycle. Okay, the message of this video, that correction we're expecting in the market is going to be a massive rotation into the software stocks, the electric vehicles, the 5G stocks, and some high growth names that we're going to go over. Okay, and that's not just my opinion, that's the opinion of the options market as well. I'll explain that too. Okay, but let's get into this evidence first of why I expect huge outperformance from these names. Okay, we talked about Okta. A lot when it was around 220, and we said that this was a very clear wave 1 and wave 2, and then it broke above this wave 1 high to confirm an incomplete bullish sequence to the upside. So it had a wave 1, 2, 3, 4, 5 to complete another large degree wave 1. Then it had an ABC correction to put in another wave 2 low. So Okta right now has formed an Elliott wave nest, and I talked about it at 220. It had this massive rally. And to me, Okta is, inches away from confirming an incomplete bullish sequence to the upside. The very minimum target for Okta is between 308 to 322, because those would be the lengths of the wave 1s placed at the wave 2 lows. But once Okta is above this high, that's an incomplete bullish sequence. Okta is heading much higher. We'll have to see what it looks like when it gets to 308 to 322 first. But Okta is a cybersecurity stock, and it's showing right now a lot of signs. It has a lot of upside, and it's done correcting. Okay, so Okta, once it's at 308 to 322, it will have hit my target about 5 or 6 months earlier than projected. Okay, but what's more important right now is that Okta is giving evidence that the stay-at-home stocks, the software stocks, are going to be huge beneficiaries of the next market rotation. Okay, this is another stock. This is Cloudflare. NET is the ticker symbol. This is very pretty right here. Okay, so NET, wave 1, wave 2, wave 3, wave 4, wave 5, puts in a large degree wave 1 for NET. It then has an A, B, C correction to put in a large degree wave 2. So I talked about NET when it was in this 72 area, and it held above my invalidation level for wave 2 of 60. Now it's reacting impulsively higher, just like Okta. Okay, so this is another software stock that had extremely low implied volatility. What am I talking about when I say that Okta, NET, DataDog, Zscaler had extremely low implied volatility? Well, on bar chart, you can go to the price overview right here, and you can scroll down to the options overview, and it will tell you when the 1-year low for implied volatility was. Okay, we'll do this on a few stocks. We can't do it on every single one of them, but every stock I talked about in this video had a 1-year low implied volatility in the beginning of April. Okay, why is that important? Because the financial quarter ended on March 20th. Okay, so the financial quarter ends March 20th, and then all these stocks have extremely low implied volatility. So the big boys right now, they're going to rotate out of these reopening, recreational, travel and leisure names, and they're going to rotate back into the growth names, the stay-at-home stocks. Okay, it's going to be out with the boomer stocks, in with the stocks that boom. Okay, and this is Cloudflare right now, along with Okta, showing signs the software and the stay-at-home stocks will be huge beneficiaries. Let's look at Cloudflare real quick. Then we'll look at DataDog and Zscaler. There's a lot of evidence right now this software sector is going to do extremely well. Okay, I heard someone say, I'm going to cut this TelaDoc stock, or I'm going to cut, DocuSign because they haven't done anything for a few months. Okay, that's wrong. Okay, this is the time for growth stock investors to double down. Okay, you're going to have your moment to shine. It's going to be with the solar stocks, the electric vehicle stocks this summer. But this is Cloudflare. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. Large degree wave 1, ABC correction, large degree wave 2. This low of 60 is held. This low of 63 will continue to hold. Wouldn't chase Cloudflare right here, but it's important to understand that Cloudflare has a lot of confirmation of an incomplete bullish sequence. It is going to go the length of wave 1 placed at the wave 2 low. So Cloudflare, I believe this is from 904 to 209. That's about 5 months that we're going to see Cloudflare go the length of wave 1 placed at the wave 2 low. Cloudflare is going to reach 124. That's going to be a minimum conservative wave 3 target, because wave theory and Elliott wave theory, wave 3 is at least the length of wave 1, very minimum, but it's actually stronger, more powerful, and faster than wave 1. So 124 is a conservative target for Cloudflare. We're not chasing Cloudflare here, but we are acknowledging Cloudflare and Okta are showing signs the software stocks are ready to run this summer. Another example of this is Datadog. Okay, so Datadog right here is very pretty. Okay, and this is the full count for Datadog. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5, large degree Wave 1. A, B, C correction, large degree Wave 2. Okay, so right now for Datadog, if this low holds of 74, I expect it will go the length of Wave 1 placed at the Wave 2 low. So Datadog, this is from 317 to 1014, exactly 7 months. I expect in the next 7 months, we are going to see this low of 74 hold. Datadog will go the length of Wave 1 placed at this ABC correction, Wave 2 low. Datadog is going to reach 163 in the next 7 months. Okay, it's going to go on a huge run with Okta. It's going to go on a huge run with Cloudflare. Okay, so right now this is really clean. 1, 2, 3, 4, 5 waves impulse. A, B, C expanded flat correction. All expanded flat means is that the wave B high slightly breaks above the wave 1 high. So the length of wave A has reached the length of wave C. I believe Datadog is turning up with the rest of these software stocks, and it is going to explode this summer. So Datadog, so long as this low of 74 holds, is going to go the length of wave 1, place the wave 2 low. Datadog is going to reach 163, in my opinion, by the end of the year. Okay, so this is another software stock, another stay-at-home stock that looks like it's going to do very well this summer. Here's another example. This is Zscaler. Zscaler looks really pretty right here, and I'll explain why. This is almost identical to Okta. This is almost identical to Okta, except it hasn't taken off yet. But Zscaler has a wave 1, an ABC correction, puts in a wave 2 low. Then it goes on another wave 1, and an ABC correction puts in another wave 2 low. I love how this wave 2 low is at exactly the 61.8% retracement of wave 1. So Zscaler right now is breaking out of a nest. What you're also going to notice, this is the great invalidation level. This is the great stop loss level of 163. Why? 1, because it's the 61.8% retracement of wave 1. 2, it's a perfect retest of this wave 1 high. So Zscaler, very cut and dry. If 163 holds as the low, this 5-month run is going to be replicated. In the next 4 months, in the next 5 months, we're going to see Zscaler conservatively reach 270. Okay, Zscaler, another name where you can go to the price overview and see very clearly the 1-year implied volatility was reached in early to mid-April. Okay, so the financial quarter ends, options become extremely cheap, and the market is letting us know right now. This is reconnaissance right now from the options market. It's telling you there is going to be a huge move in Zscaler. You can use sector analysis. You can use wave theory. You can use other forms of technical analysis as well to figure out which way that large move is going to break. All these software stocks are showing the same thing. It's going to be to the upside. Zscaler right now, one of the prettiest examples of that. Wave 1, ABC, wave 2, wave 1, ABC, wave 2. If 163 holds, Zscaler is breaking out of a massive nest. Okay, it is going to go the length of wave 1, place of the wave 2 low. Zscaler in the next 4, 5, 6 months will reach 270 and participate in the software rally. Okay, so let's look at some of these other stay-at-home names. You guys ask about these a lot. I think they are looking like really good setups now. So here's Zoom. Okay, Zoom Communications, ticker symbol ZM. This is what I have for Zoom. Wave 1, wave 2, wave 3, wave 4, wave 5. Puts in a large degree wave 1 for Zoom. It then completes an ABC correction to put in a large degree wave 2 right in the 50% to 61.8% retracement box of wave 1. So the invalidation level isn't the clearest or the cleanest for Zoom, But we want to see this 61.8% retracement low of 262 hold. If 262 holds as the low, I expect Zoom will go the length of this rally placed at the wave 2 low. So it's going to replicate what it did in 2020 very quickly. This is from December 2019 to October 2020. Okay, that's about a 10-month run. But in reality, wave 3 in Elliott wave theory is much stronger and faster than wave 1. I think in the next 8 to 10 months, 12 months conservatively, Zoom is going to replicate this rally. It is going to fill out the left side of the space, start filling up the right side of the space, and form a cup and handle pattern, and it's going to explode. The length of wave 1, placed at the wave 2 low, right now would take Zoom in the next 8, 10, 12 months to 824, okay? And remember, that's a very conservative wave 3 target, as crazy as it sounds, because wave 3 in Elliott wave theory is actually much larger and faster than wave 1, okay? But Zoom, wave 1, wave 2, wave 3, wave 4, wave 5, largely wave 1. That's clearly an impulsive structure. We have an ABC correction. We have declining volume confirming this corrective structure is going to be looking for a large bounce impulsively out of this wave 2 box. So as long as 262 holds as the low, in the next 8, 10, I think 12 months conservatively, Zoom is going to replicate this wave 1 rally. It is going to reach 824, okay? That's going to happen towards the end of this year. But Zoom, the stay-at-home stocks, the software stocks are all going to flock as birds of a feather together. Okay, another one you guys ask about a lot. I like this right here. Okay, I actually have done a couple takes of this video, so this isn't the count I want to show. But let's just look at a few ways to count Salesforce. The first way to count Salesforce, in my opinion, is this is the wave 1, this is the wave 2, this is the wave 3. We have an ABC correction to put in the wave 4 low. So wave 5 in Elliott wave theory is going to be, it definitely has to be the length of one of the waves, one of the previous impulsive waves. That would either be wave 1 or wave 3. Okay, if it was the length of wave 1, we can see with our own eyes that wouldn't take Salesforce above this wave 3 high. So if you count this as 1, 2, 3, ABC 4, then Salesforce is going to go the length of wave 3, placing the wave 4 low. Here's how I actually prefer to count Salesforce. I've done a couple takes of this video. This is actually going a lot better because it's kind of like a rehearsal. But anyway, this is how I actually have Salesforce counted, where that's a wave 1, that's a wave 2, and then this is another wave 1, and ABC correction puts in another wave 2. The reason I like this count more is because Salesforce is reacting from the 50% to 61.8% retracement box of wave 1. To count this as a wave 4, you'd have to kind of cover your eyes over the fact that it goes past the 50% retracement of wave 3. But I think this is the next for Salesforce, where it goes wave 1, wave 2, wave 1, ABC, wave 2. Salesforce will go the length of wave 1, place at the wave 2 low. So long as 203 holds at the low, this rally is from 402, 403 to 902, 903. In the next 5 or 6 months, as crazy as it sounds, Salesforce will go the length of wave 1, place at the wave 2 low. This would also be a textbook bull flag, by the way. This might be a time where classical traders will do better than their wave theory friends, because they're just going to be very simple about this and say this is a bull flag. And Salesforce has low implied volatility. It's going to break out with the rest of the software and stay-at-home stocks, and it's going to explode higher. But this is a wave 1, a wave 2, a wave 1, an ABC correction wave 2 in the 61.8 to 50% retracement box of wave 1. We're going to look for Salesforce to go the length of wave 1, place at the wave 2 low. I think in the next 5 months, in the next 6 months, Salesforce will reach 356. Okay, so those are all the software stocks. Those are all the stay-at-home stocks. Let's get into the 5G stocks right now. This is AT&T. I love this setup on AT&T. This is a gorgeous setup. AT&T and Verizon in the last week of April have reached the very bottom of their 1-year implied volatility range. Options are extremely cheap. They're ready for large moves. To me, the wave theory for both of these stocks is very clear. That move is going to be to the upside. So this is AT&T, wave 1, ABC, wave 2 correction. Wave 1, ABC, wave 2 correction. So the invalidation levels and the stop levels are first going to be this low of 27.89 is the stop. The real invalidation is this low all the way down in March 2020 of 26.08. But AT&T, wave 1, ABC, wave 2, wave 1, ABC, wave 2. You take your pitchfork, you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2. AT&T will go from the lower bound of the pitchfork to the median of the pitchfork. It will reach the 161.8% retracement of wave 1. an extension of wave 1, I should say, which is the wave 3 target of 37. From there, I'm looking for a shallow wave 4 correction followed by a 5th wave higher. So in the next 6 to 8 months, AT&T is going to go from the lower bound of the pitchfork to the median. It's going to have a shallow wave 4 correction and then go on a 5th wave higher. I expect in the next 6 to 8 months, AT&T will reach 37 and then it will reach 42. I really think by the end of this year, we're going to see AT&T in the 40s. We want to see 27 and 26 hold as these wave 2 lows for now. Okay, AT&T, very cut and dry setup. Love this pitchfork right here. Wave 3, this is almost in the books for me right now that it's going to hit the median of this pitchfork, have a shallow wave 4 correction, go on a 5th wave higher. Okay, let's look at Verizon right now. Verizon, really pretty, really pretty. I love this. So Verizon and AT&T both in the last week of April hit the very bottom of their 1-year implied volatility range. So it's up to us. The options market is already telling us these stocks have cheap options and they're done consolidating. They're ready for a large move. We have to figure out as Elliott Wave theorists, as technical analysts, which way that move is going to break. For AT&T and Verizon, to me that is very clear. It's going to be to the upside. So Verizon, when I talk about a leading diagonal, what's a leading diagonal? A leading diagonal is when a wave 1 subdivides into what people who aren't good at trading will call a rising wedge. Okay, so a rising wedge in wave theory, we call this the rookie wedge. Okay, why? Because this is actually a leading diagonal. So it's a wave 1, a wave 2, a wave 3, and then how do you know it's a leading diagonal? Because it's the one time in Elliott wave theory where a wave 4 will overlap the high of wave 1. So this is the leading diagonal. This is a textbook leading diagonal for Verizon. Wave 1, wave 2, wave 3, wave 4 overlaps, wave 5 forms a large degree wave 1. Then we have an ABC correction. So the rookies, they're going to say this is a rising wedge, right? This is bearish. No, it's not. Okay, if you take the entire size of wave 1, look at this. The 61.8% retracement of wave 1 is exactly where Verizon bottoms. Okay, so the next time someone asks you who's buying up here, who's selling up here, show them this chart of Verizon and say who decided to sell Verizon or who decided to buy Verizon at exactly the 61.8% retracement of wave 1. Okay, it wasn't your cousin, it wasn't your coworker. These are computer algorithms controlling the market. Okay, if we take the length of wave 1, we place it at the wave 2 low. This is almost probably my favorite setup in the whole video besides AT&T because the invalidation levels are so clear. We want to see the 61.8% retracement of wave 1 hold as the wave 2 low. From there, Verizon will go the length of wave 1, place at the wave 2, Verizon will reach 66. Okay, so Verizon's going to reach 66. The time target for that is very similar for AT&T's. It's from March 23rd to 11:30. Okay, that's about 8 months, but in reality, wave 3 is much stronger and faster than wave 1. So I think in the next 6 to 8 months, we're going to see Verizon hold above this low of 53.83, and it's going to go to the length of wave 1, place of the wave 2 low. Verizon in the next 6 to 8 months will reach 66 and go on a run as a 5G stock with AT&T. Okay, well, let's get into some of these electric vehicles now. I think the electric vehicles, we talked about solar a lot, but the electric vehicles too are going to be huge beneficiaries. They're going to be huge beneficiaries of this next rotation. Clean energy stocks are going to rule this summer with the software stocks. Here's the evidence for that. NEO, wave 1, wave 2, wave 3, wave 4, wave 5, clear as day, that's a large degree impulse structure. What we're then looking to do is buy an ABC 3 waves pullback for wave 2. Wave 2 in Elliott wave theory is a little more art than science than wave 4. Wave 2 in Elliott wave theory, the textbook wave 2 will end at the 61.8% retracement of wave 1. A shallow wave 2 will end at the 50% retracement of wave 1. A further deeper wave 2 should not go past the 78.6% retracement of wave 1. Okay, so NEO right now forms a wave 1, a wave 2, a wave 3, a wave 4, a wave 5, forming a large degree wave 1. It then has an ABC correction. I believe NEO is going to react impulsively from this box and go from the length of wave 1, place at the wave 2 low. I want to see this low of 31.91 holds the low, but actually when you look at the upside, that's a pretty tight stop. I want to see 26.57 hold as the low. This 61.8% retracement I don't think will be broken for NEO. Then NEO will bounce from this box impulsively. It will go the length of wave 1, place at the wave 2 low. NEO, as crazy as it sounds, is going to reach 96. Okay, right now we want to see 31 hold, we want to see 26 hold. This move for NEO is from 316 to 111. Okay, so that's about 8 months. We're going to see NEO go on this huge run. Okay, but in reality, Wave 3 and Elliott Wave 3 is much stronger and much faster than Wave 1. I think in the next 8 months, 10 months conservatively, NEO is going to go to the length of Wave 1, place of the Wave 2 low. NEO is going to bounce from the 61.8 to 50% retracement of Wave 1. It's going to reach 96 in the next 8 months, 10 months conservatively. Okay, where does NEO get the juice for that? Well, just like all these other electric vehicles, I can't show all of them, but this is NEO's right now. Options overview, implied volatility low is formed on April 8th. Okay, so all these growth stocks, all these stay-at-home stocks, all these clean energy stocks have the cheapest options right when the quarter ends. Okay, that's a sign that as a group, the big money is going to rotate out of their travel and leisure names back into the growth names, back into the stay-at-home names. When the options are cheapest, retail falls asleep, and they get into their positions. So right now, NEO has the juice. It has reached the very bottom of its 1-year implied volatility range. NEO is going to go from 31 to 96 in the next 8 to 10 months. Okay, what's more evidence that NEO is going to do this? So we're going to keep going over in this video. The rest of the electric vehicles, along with NEO, are going to show this exact same phenomenon playing out. Okay, so here's another electric vehicle stock. This is probably the cleanest count out of the electric vehicles, and here's why. This is Blink Charging, BLNK. Very clear wave count here. This is the wave 1, this is the wave 2, this is the wave 3, this is the wave 4, this is the wave 5. This is clearly, clear as day, a 5 waves impulse structure. You don't look to short the wave 2 correction, you look to buy the dip and the 61.8 to 50% retracement of wave 1. So this is a 1, 2, 3, 4, 5, large degree wave 1 for Blink Charging. It has an ABC correction to put in a large degree wave 2. BLNK, look at this. It bounces at exactly the 61.8% retracement of wave 1. So Blink is going to hold above 25. It's going to go to the length of wave 1, place at the wave 2 low. That's going to take Blink to 88. I'm freezing up here. Let me refresh this. But Blink is going to go to the length of wave 1, place at the low of 25. So 25 is the stop level. It's also going to be acting as our invalidation level. Blink, another one with NEO, forms extremely low implied volatility. And Blink is going to go to the length of wave 1, placed at the wave 2 low of 25. What we're going to want to see right now for Blink is 25 hold as the low, and then the length of wave 1, placed at the wave 2 low, will take Blink all the way to 88. Okay? I'm freezing up a little bit. Let's get back to Blink in a second. This is Workhorse. So Workhorse right now is another really pretty electric vehicle stock that looks like it's completing a really important wave 2 correction. Another one that had the very bottom of its implied volatility range reached in April. So Workhorse has a very clear 1, 2, 3, 4, 5 large degree wave 1 impulsive structure. From there, we look to buy an ABC correction in the wave 2 retracement box. Okay, so a shallow wave 2 will end at the 50% retracement. The textbook wave 2 ends at the 61.8% retracement of wave 1. A deep wave 2 should not go past the 78.6% retracement of wave 1. So right now, we want to see Workhorse hold above 9.48. If it does, we have some very clear levels for Workhorse. It is going to go the length of this impulsive structure placed at the wave 2 low. That's going to take Workhorse to 53, 54. Okay, the time target for that is wave 3 is stronger than wave 1 and Elliott wave 3. So from 309 to 525 is about 10 months. Okay, in reality, I think it's going to be faster than 10 months because in Elliott wave 3, the length of wave 1 placed at the wave 2 low will take Workhorse on a huge run higher. But in the next 8 to 10 months, I want to see 9.48 hold as the low. I think by the end of this year to the very beginning of 2022, we're going to see Workhorse go on this huge wave 3 rally with the rest of these electric vehicle stocks, with NEO, with Blink Charging. It's going to hold above 9.48. It's going to reach 53.60. All right, this is the wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1, ABC correction, large degree wave 2. Let's see if Blink loaded for us. Blink. All right, so I just want to make sure I got the target. We covered Blink a lot, but the target right now is the length of wave 1 placed at this wave 2 low of 25. That takes Blink to what I thought 88. See, I told you this is the second time I've filmed this video, but Blink is going to 88. It's going to hold above 25. It's going to bounce out of this retracement box, and Blink's time target is actually a little faster than Workhorse's, because this whole run is from 528 to 126, 128. That's about 7 or 8 months. So in the next 7 or 8 months, if Blink is above 25, it has huge upside, because in reality, the length of wave 1 placed at the wave 2 low is the conservative wave 3 target of 88. So let's look at Acromoto. This is the last electric vehicle stock we're going to look at in this video. It's basically the exact same setup as Neo, Workhorse, and Blink Charging. It has a 1, 2, 3, 4, 5 large degree wave 1. This is clearly an impulsive structure. All right, we can see the 5 waves very clearly on this chart. We take the entire size of wave 1. We look at the 61.8 to 78.6% retracement box as the area we want to buy. I think what's really interesting about Acromoto is if you look at the 78.6% retracement is 8.64. That's also this wave 1 high, which is 8.89. So very clear in validation. We want Acromoto to hold above 8.89. If it does, it's going to go the length of wave 1. It's going to place at the wave 2 low. That will take Acromoto to 45. Okay, this move is from 316 to about 126. So very similar to Workhorse, almost identical to Workhorse. We're looking for 8 months, 10 months, 12 months out from now. This low of 8.64 is going to hold. Foov, Workhorse, Blink, and Neo all have extremely low implied volatility. They're going to go the length of wave 1. They're going to bounce impulsively out of this wave 2 box, and they're going to be huge beneficiaries of the next rotation. 1, 2, 3, 4, 5, ABC correction in this wave 2 box will take Acromoto, ticker symbol FUV, to 45. Now it's going to happen in the next, I think 8 months would be aggressive, 10 months would be just right, 12 months would be conservative, almost the exact same time horizon as Workhorse. Okay, so those are the electric vehicles. Let's get into some of the stocks you guys have requested a lot, some of these high growth stocks, some of these miscellaneous high growth stocks, I would even say. Okay, so this is Rocket Mortgage. You guys have asked about this one, and I actually think this is a good setup myself. So this is Rocket Mortgage. Has a 1, 2, 3, 4, 5 large degree wave 1, and then has an ABC correction large degree wave 2, and a basis for several months. Okay, if we take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, gorgeous reactions on the lower bound of this pitchfork. Okay, I think in the bigger picture, we're going to see Rocket Mortgage go back to the lower bound of the pitchfork, even all the way to the median of the pitchfork. Okay, it has the juice to do this. It's been showing up on our implied volatility screeners like crazy. For the bar chart straddle and the bar chart strangle index. I would take a picture of the bar chart straddle and strangle index every night, put it in a folder. If stocks show up on a group together, put them on a watch list on your trading app. You're going to see your options trading career really accelerate. But Rocket Mortgage is ready to move. Okay, I think that's going to be to the upside, and here's why. This is a wave 1, an ABC correction puts in a wave 2 low. We have another wave 1, and then we have another wave 2 correction. So right now, the invalidation level is very clear. 17.78 has to hold as the low. Okay, if it does, there's a good chance that this is an Elliott wave nest, which is a wave 1 and a wave 2, then another wave 1 and another wave 2. If we take the length of wave 1, this is from 1030 to, I believe this was in 1030 to the very beginning of March. So less than 6 months. I think in the next 6 months is 17.78 holds as the low. Rocket Mortgage will go the length of wave 1, place at the wave 2 low, and then the wave 3 target would take Rocket Mortgage to 46. I think that can happen in the next 6 months, so long as 17 holds as the low. Let me just show you guys what I'm talking about real quick. So you go to options on bar chart, go to the long straddle. I think we're going to see Rocket Mortgage on there tonight. I'd be very surprised if we don't. But Rocket Mortgage has been showing up on this a lot. I use low implied volatility screeners, and I look for stocks as a group to show up with very low implied volatility, and then if they show up as a group, that makes me, very excited. So, Rocket Mortgage isn't on the straddle screener right now. We see some of these meme stocks like AMCR and Nikola. Let's see if it's on the strangle screener. But I've been watching Rocket Mortgage show up on these screeners for the past entire month. It's been showing up several readings. Let's see if it's on the bar chart strangle screener right now. If it isn't, Yeah, Rocket Mortgage. See, right here, twice, right? So Rocket Mortgage is on this strangle screener twice. It's actually on the strangle screener 3 times. Okay, so Rocket Mortgage is ready for a large move. The options market will tell you that. Then you use wave theory, you use sector analysis to figure out which way that move is going to go. For me, it's very clear if 17.78 holds as a low, then Rocket Mortgage has completed an Elliott wave nest. It's going to go the length of wave 1, place at the wave 2 low, and in the next 6 months, that's going to take Rocket Mortgage to 46. Okay, so we'll get into Nano Dimension real quick. We'll get into Beyond Meat real quick, and then we will wrap up this video, and I'll get it posted for you guys. But Rocket Mortgage, so long as this low of 17 holds, we're going to take the length of wave 1, place it at the wave 2 low. Rocket Mortgage is going to 46. Okay, so here's Nano Dimension. I talked about this video, talked about this stock, or I posted about this stock. Here's what I'm seeing for Nano Dimension. Very clean. Wave 1, wave 2, and then has another 1, 2, 3, 4, 5. I believe this forms another wave 1, and here's why. If you take the entire size of this move, you can't call it a wave 3. Why? Because the ABC correction goes past the 50% retracement of the wave. So to me, this isn't a wave 3. This is another wave 1, and this isn't a wave 4. This is another wave 2. So I believe Nano Dimension is breaking out of a massive Elliott wave nest. It's going to go the length of wave 1, place at the wave 2 low. That's going to take Nano Dimension to 23. Now the stop level, well, when I first posted about Nano Dimension, it's moved up a little bit. The stop level was really tight at 6.50. I know that doesn't sound tight, but if you look at how much Nano Dimension moves, that actually is tight. The stop is always going to be in proportion to the upside we're looking for. Right now, I believe this is from 909 to 126. So I think in the next, honestly, the next 6 months feels conservative, but the next 6 to 8 months, we're going to see Nano Dimension go the length of wave 1, place at the wave 2 low. 650 would be a very tight stop, but if it holds, we're going to see 23 reached in the second half of this year. Okay, the invalidation level right now that I really like is this wave 1 high of 4.89 because it's also the 78.6% retracement of wave 1. So if 4.86 to 4.89 holds the low, Nano Dimension, wave 1, wave 2, 1, 2, 3, 4, 5, completes another wave 1, has an ABC correction to put in another wave 2 low. Nano Dimension breaking out of a huge nest, extremely low implied volatility. This stock is going to have a huge move. The wave theory tells me it is going to be to the upside. Let's see 650 hold for now, but the invalidation level is 4.86. Okay, so wave 1, wave 2, another wave 1, another wave 2, Nano Dimension getting ready to explode. Last stock, this is another high growth stock. This is Beyond Meat. Beyond Meat looks really good here. First, some interesting facts about Beyond Meat. Very low implied volatility seen in April. Extreme low implied volatility seen in April. But this also has a 23.5% short float right now. Those bears who are shorting Beyond Meat, they have 3.5 days to cover. So Beyond Meat starts taking off. There's no guarantee that they can get out of their position. I think this is a huge short squeeze in the making right now. Here's the wave count. Wave 1, ABC correction, wave 2. Wave 1, ABC correction, wave 2. Wave 1, ABC correction, wave 2. This is a triple nest, okay? 23.5% short float. 3.5 days to cover, low implied volatility. Oh my, right? I would not be shorting Beyond Meat right now, but this is a wave 1, an ABC correction, wave 2, another wave 1, another ABC correction, wave 2. The last time I posted about Beyond Meat was in this range. From there, it broke above this wave 1 high. So as long as this low of 113 holds at the low, Beyond Meat is actually incomplete to the upside. What I believe is going to happen, we are going to see 113 hold at the low. Beyond Meat is going to go back to the lower bound of the pitchfork. It's going to go the length of wave 1 in time and price, placed at the wave 2 low. This is from 316 to 1005. I think in the next 6 months, in the next 7 months, I actually think 6 months is the perfect time target. We're going to go the length of wave 1, place at the wave 2 low. Beyond Meat is going to be a short squeeze to 261. We're going to see that happen in the next 6 months.